The stock has more than doubled over the past 6 months, and Wall Street is trying to catch up, with a number of analysts hiking their price targets recently, including Wedbush to $550 on Wednesday. That's and New Street to $800 on Tuesday. Joining us now is Craig Irwin, ROTH Capital Senior Research Analyst. Good to see you this morning.
Morning.
You have a sell on this?
Yes,
Am I
do.
reading that right?
Sell rating.
$249 the price target. Am I reading that right?
That is correct.
You're aware the stock's at $572.
Absolutely.
How are you feeling this morning?
You know, I'm nervous for people that have been buying it in the last couple of weeks. I mean, you look over the last 3 months, what's really changed? We knew China was going to happen. We knew it was a knockdown. We knew that they could show us pretty much any production number they wanted out of that facility. Yes, there will be buyers in China. We always expected that to be successful, but that was basically known. You look at the quarter, the last quarter, that was a very good quarter. That's the one thing that has changed in the last couple months. You know, they sold more out of the channel than what they produced. This quarter, you know, they produced, well, they sold 7,000 more cars than what they actually produced, so more sales out of the channel. That's a working capital bump, $350 million working capital bump. That's what's changed. That cannot happen perpetually. You cannot continuously sell more out of the channel than what you produce.
Do you think reporting the next quarter's earnings is what changes this run, though? This is a momentum run, not a, oh, well, we expect a good quarter to come. And
short covering on top of that, too.
Right.
Yeah, a lot of people were stopped out. So the guidance is number one, right? So guidance in this past has been a little iffy, right? 2018, at one point, they were looking for 500,000 units. Didn't come close. So guidance for this year, you know, does he give us, you know, the 420 to 600 that he tweeted out in the midst of his SEC problems earlier this year, or earlier last year, I should say? You know, if he does, the stock probably hangs in there. The quarter itself will not be as interesting as far as the forward-looking statements, and I expect the overhead from the Chinese factory to weigh down margins, weigh down performance in the first quarter, and then you have the pull forward with the cliff of subsidies going into the end of the year. So there's multiple things that kind of do work against them for forward commentary, and you know, valuation's frothy.
Just explain that. So they're bringing forward that subsidies are going to expire, and so therefore people who are thinking about buying are going to pull that
in the U.S. In the U.S. Yeah, in the U.S. we have, you know, there will be a component of the sales that it will cliff.
Mm-hmm. So when you model this out, what are you discounting in terms of regular steady-state growth versus kind of what the price is saying right now?
So, you know, 19, there was 47% unit growth. You know, this year I'm modeling about 27% unit growth. Stocks saying, you know, 50% still, right? So that means, you know, basically another 180,000 units, which, you know, is pretty aggressive considering the stage of maturity of the company. They've been executing really well, but, you know, another 180,000 units in 2020 is aggressive.
You said, as it relates to China, you were somewhat dismissive of that, saying, well, it was known. But isn't it fair to say that they, quote unquote, kind of figured out China quicker than most people thought? That they started producing from there quicker than most people thought? And that sort of turbocharged, to use that word, the stock more recently.
So the facility in China is a knockdown. It did come together with blistering speed, very different than the experience, you know, in their Fremont facility. But what is a knockdown? A knockdown is a facility where you bring in parts at different stages of completion and assemble them. So, you know, only 30% of the content is local to China that's actually used in that facility. So we need to be careful in giving them too much credit for that, right? If 100% of the content was local or 80% of the content was local, that would be a different experience. I mean, the most cynical view of a knockdown is, hey, you can, you know, ship the doors in separately and bolt them on there and start your stopwatch and turn it off, and oh my gosh, we have, you know, 100,000 capacity. China was known. It was known it was a knockdown. It was known that they were going to be successful. There are buyers in China, but, you know, there's plenty of people with money in China. So it will be a successful market for them, but the rate of growth and sort of the unit expectations, I think, are getting frothy.
But the lesson in all this, as Will said, is, you know, momentum is a powerful thing to be betting against. in this stock, maybe more than any other, it's, whether it's a cult stock, the momentum, the repeated and long-lasting momentum that seems to be behind this, isn't it difficult to be in a position of having a target of 249 when the stock's at 572?
So a very large chunk of the run-up has been retail. And, my bread and butter, my everyday for the last 20 years has been emerging growth stocks. So small cap, micro cap, emerging growth stocks, that's very much how Tesla behaves. Those stocks correct violently when they correct, and we could very well see a fairly substantial correction in Tesla stock.
I respect as well the way you haven't chased the share price up with your price target while still having a sell, which a lot of people have done, which I think is a bit of a sort of halfway house, keeping a sell rating.
It's wimpy. It's totally
It's a wimp,
wimpy.
exactly. But 249, Craig, obviously it's a long way off where we are today. What's your time frame of when that can be hit? Do you think that this quarter's earnings, if it was a big miss, sees a 50% drop in the share price, or do you accept that in the short term, the next 3 to 6 months, you're likely to still be quite some way off? Or do you think this could be a collapse in the short term?
I think the potential for a 20 or 30% correction is quite significant, right, over the next small number of months. Could it go down to 249 this year? Absolutely. It kind of depends on how China actually plays out for them. Remember, China auto sales are weak. There have been some mischaracterizations about the nature of the Chinese EV market. The Tesla vehicles are not comparable to the core of the Chinese EV market. So there could be some fairly substantial violent
We have a hard
readjustment.
break. Craig, thanks so much for joining us.
Thank you.
Surat, thanks so much for joining us. Let's go. It's been a pleasure.